Hi, in this $10,000 a day trader training, you will learn things that the greatest of traders have always been hesitant to share. Some of what you're about to experience will probably shock you, and some might even upset you a little. But whatever happens, your trading will never be the same again. Now you might wonder why anybody would happily hand over $10,000 a day for a trading course. Well, because I'm retired now and the whole course is yours for free, you're about to find out. Now, below this you'll also find a follow along and downloadable guide to the trader training course, and it's just below this video. And just one more thing before we get started. You're not alone in this, because I will personally respond to any questions or comments to help you on your way. So let's make a start. Hi, for those of you who don't know me, my name is Martin Cole. I've been trading financial markets for close on 20 years. Now early on in my trading career, I discovered how markets really work, and within 5 years of that discovery, I was financially free, living a retired lifestyle on the Costa del Sol in Spain. Now through this course, I'm going to reveal to you everything I learned and give you the exact method on how to put this together for yourself so that you can have everything that success means to you. Now, if you've been trading for any number of years, some of what I will reveal may have a slightly upsetting effect on you as you discover exactly why you've not been able to achieve all that you've wanted from your trading. Now, if you find yourself in this situation, just let it go, because that part of your trading life is behind you now. You are now on a new path, a path that will take you to exactly where you want to go. You're now going to learn about the way in which the market makers run their business, and in doing so you will have a trading method that never changes, a trading method that is consistent as the rising sun. Now, as you work through this course, keep in mind that this is not something that I invented. This is not a trading method that I sort of devised. The simple truth is that this is something that I discovered, something that at first I could not believe was true. Once you accept that the markets are a business, and a business like any other business whose sole aim is profit, you will start to see the real content of the financial markets and then completely understand how you are going to profit from that content. The market maker's method is a method of trading the markets that never changes and has consistent rules. Now over the next few hours we'll peel back what is a deceptive cover and show you exactly how this works. Perception and reality. How we perceive something may or not be true. For example, have you ever driven down the road and ahead of you looks something like a dead animal? In fact, you're convinced it is, but as you get closer it's just an old brown paper sack. Now trading is a bit like this, where our senses are deceived by what we're trained to see. The difference with trading is that the mind gets fixed on this one image like we see in the road, and even though we get closer and closer to it, we can't change that image to what it really is. We are stuck with this very misleading image. So what do you see here? Is this an old woman or is it a beautiful young lady? The old woman's lips are the young lady's necklace. The old woman's nose line is the young lady's chin line. The old woman's eye is the young lady's ear. When looking at this, notice how your mind will jump backwards and forwards between the two images. Which one is reality? Well, they both are, depending how you look at the image. But here is an interesting thing. Now that we know, now that we can see both images, if we want to just hold the image of just one side of this image, it takes real effort to do that. Try holding the image of the young lady without letting your mind jump back to the old lady. It's not easy. It takes training of the mind. Now what we can draw from this is that this picture, or what we imagine as a picture, is in reality just a series of lines. It is our mind that constructs the lines into an image. It is our mind that makes sense of this and tells us this is a picture. Now this has far-reaching implications for a trader, because when you're looking at a chart of a market, you're looking at a series of lines. Your mind will absolutely be driven to construct meaning from those lines, and the default action of your mind will be to create a picture in the form of a pattern. Now traders' minds will automatically default to creating a pattern and then to place meaning on that pattern, because traders are routinely taught that patterns reveal the future direction of the market, thus leading to success. The truth is these patterns are nothing more than a paper sack in the road that appear to be something they're not. And there's a quote that goes something like, "Men think in herds and they go mad in herds while they only recover their senses slowly and one by one." You might say that this whole course is about training your mind to see the reality of the market as opposed to the perception that most people hold. This course is about revealing to you how the market makers run their business behind the facade, which is presented via chart patterns and so-called technical indicators. Okay, so where are we going to be making a start? Well, first we're going to be breaking down the cash market, and as a result of this we will come to automatically understand all other markets. Now we're going to do this in such a way so that it reveals to us the actions that the market makers engage in on a day in, day out basis to manipulate and control the markets. Once you understand these repeatable activities, you will automatically understand every other market, and I really do mean every other market. However, in case you're completely new to this business, I'll just run through some basic explanations of market movement to essentially explain what a trader does. Speculation in an uptrend. In a nutshell, it's all about speculation. As traders, we are speculating on where and when and how markets will move in a given direction. When we get this right, we make a lot of money quickly. When the market is moving in a given direction, traders will say the market is trending. However, there are as many explanations as there are traders as to what constitutes a trend. We will come to understand the trend as having a single definition that we call the profit release phase. But for now, we're going to stick with the trend terminology to explain the basics of speculation. Now here I've represented the trend of the market as a wavy line that is overall trending upwards. This line would be representative of a continuously increasing market price. Now seeing a trend like this, there's no real value as you can't make money from historic price movement. However, the crowds or the masses of traders place great meaning on historic movement to predict future direction. This is something that you will come to understand as being fundamentally flawed with little value as a trading method. You'll also come to realise so this can be used as a powerful tool against you, that is used against traders to continually draw them into making poor trading decisions. Now a poor trading decision will be something like engaging in a market almost at the exact moment it moves in the opposite direction that you anticipated it would. This is not chance or bad luck, by the way. It's a method the market makers use to literally trap you, to lock you into a poor trading position, where later on you'll be taken out with small but mounting losses. Now don't worry about this now, it's not going to be happening to you by the time we get to the end of this course. Incidentally, a great book to read on masses and how they're influenced in the most bizarre ways is Extraordinary Popular Delusions and the Madness of Crowds, a book written in 1841, still 100% relative today, about crowd behaviour. Read this book and then visit a few traders forums to see how the masses of traders are daily led into believing things that have no substance outside of a pattern. A bit like the old lady and the young girl image. So, in order for you to make money, you need to speculate where the line or price is going to move in the future. In this example, we need to speculate the price move will be above the line marked at A. However, that is only half the story, because even if the price was to move above the line at A, there is no guarantee you would make any money. Let's have a look at the downtrend. Speculation in a downtrend. Here we can see this is a downtrend, that is, the market price is falling down as represented by the wavy line. Now in this case we would need to speculate on the market moving lower than the line at A. If we're talking about movement now, it is probably a good time to quick mention about trading terms that you'll come across. A term you'll often hear is the long or short side of the market. It's pretty simple really. The previous slide was showing the long side, which is the market price moving up, and the short side is the market price moving down. Long is going up, short is going down. So if a trader said to you, I went long, they would be saying they had bought the market, whereas if they said they went short, they would of course be selling the market. Going long is buying, going short is selling. I'd just like to throw something in here so that it's in the back of your mind, mulling over so to speak. And this way, when we get to that part of the course where you look at this in greater depth, you'll reflect back to this section on buying and selling. It is this. In order for you to buy the market, someone must be willing to sell to you. In order for you to sell the market, someone must be willing to buy from you. Clearly, this creates a bit of a dilemma, because if you believe the market is going to rise and you want to buy the market, someone must be willing to sell in order for you to buy. If someone's willing to sell to you, they must have a completely different belief about the future direction of the market. They must have 100% conflicting belief to yours. Okay, that's all for now on that, as we'll get that further on into the course and exactly what that means. Speculation on higher prices. Now earlier I mentioned that the price moving above the line at A was no guarantee that we would make money. The reason for this is because even if we had bought the market as it passed through the line at A, no actual profit would be ours until we closed that trade at a higher price than we bought it at. Now, in order for us to make money, we would be speculating that the price would be moving above the line at A and reach B. where we would then close the trade. Now, every trade consists of an opening position and a closing position. Every trade is like the completing of a circle with an open and a closed trade taking place. If you buy the market at A and the market has not yet been closed, you have what is known as an open trading position. That is, the circle is open and has not yet been closed with a sell order. Now, this circle concept is another very important element to hold on to as we get further into the course, because without circles being opened and closed, nothing would actually happen in the markets at all. There would be no price movement at all. Now, clearly, as we can see on this slide, we need to be working with distances. We need to correctly speculate that the market will continue in our chosen direction and will continue to do so until it reaches an area where we can close the trade for profit. So in summary, we need to ask the question, will the market make a new high above the line at A, and will it continue to be? If we speculate correctly, we are going to make money. If we do not, then we're likely to lose money or just maybe even break even. Let's now have a look at what I call the profit release distance and what this means. The profit area. Now, the trader will make a profit based on the value of the distance between points A and B, just like you see in the slide. It is exactly the same principle whether you are buying or selling. It's only the bit in the middle we are interested in, the profit release area, the distance between 2 points. And right around now, I'm often asked the questions, what is the distance and how much profit can I make? Now, these are understandable questions, but to talk about this profit release area purely in terms of quantity of money is not relative to what we're doing here. You see, money is a byproduct of trading correctly. Success as a trader should be measured in your ability to consistently predict the future direction and distance of the market. If you work on this and not the money will take care of itself. Let's have a look at how this works out. Profit measurement. To keep it simple, we will assume the distance between points A and B is 20 pips or points. More on pips and points in a moment. Now, if you're a trader, have in this case bought the market at point A, then you close that trade at B, you would have made a distance or made 20 pips profit on the trade. Now, something worth mentioning at this point is another trading term called taking a position. If you'd bought at A, you would have taken a position or opened a position. If you'd sold at B after buying at A, you would have closed your position. If you'd bought at A and not yet closed your position, you would have what is known as an open position. We're back to that circle thing again, okay? Okay, so back to pips and profit, and let's assume you would speculate $1 for every pip. When you closed the trade at B, you would have made the grand total of $20. It's not very much, right? And this is where a lot of traders go astray in this business because they focus on the money. If instead you focus on your ability to correctly speculate movement and you build confidence in that ability, you will in turn feel confident to risk more money per pip. $5 a pip is now $100 for the same 20 pips. At the peak of my trading before I retired to Spain, I would build to 9 contracts, each worth £25 a point. So those same 20 pips were worth £4,500, or about that time about 9,000 US dollars. It is confidence in your ability to trade successfully that is the real important thing here, not the money. If I had fixated on the money, I would have seriously diminished my ability to correctly speculate and predict future market direction. Now, just one thing before we leave this slide. I've shown you a distance of 20 pips. I did this to keep it simple. However, I would not take a trade if there was only potential for 20 pips. I'll be teaching you how to plan your trades for consistent 90 pip moves. Now, you'll not always get the full 90 from these moves, but you will be trading for 65 or 75 pip targets. The overall message here is that money takes care of itself when you have mastered the skill to consistently predict market movement. Pips, points, contracts and lots. Now, in the previous slide, I interchange pips and points. Basically, pips and points are a measurement in terms of price movement, whereas lots are referring to the quantity you're trading. At the end of the day, it all comes down to measurement of distance and quantity traded, and this is quickly learned as you start basically to trade in live markets. You know, today dealing platforms and how you actually place trades really is a piece of cake that is soon learned with a few mouse clicks. I remember when I started out, things were very different, and you had to learn how to speak to a broker with the least number of words and the clearest of instructions. A few minutes later, the broker would call you back with your orders and your fill prices. Now today, of course, all very different. This complete process is achieved with a few simple mouse clicks. Okay, so a section summary. So things we've covered in this section. The market has a surface side of patterns. Most traders will default to trading patterns in the same manner that the mind jumps backwards and forwards from the old woman to the young lady. Now traders trade this way. They do this because of how the market is presented to them. The way in which the market is presented literally keeps the trader's mind on the surface side of the market, rarely if ever getting to see what is really going on within the market maker's business. Now it's no coincidence that 95% of traders are all doing the same thing. They are all trading the same patterns and indicators and variations of those indicators. Is it then a coincidence that around 95% of traders never make any real headway into successful trading? I'll leave you to ponder on that for a while. Now let's head into the second stage of this training. So here we are at section 2. Now section 1 was a sort of gentle lead-in, but in this section we're going to get to the absolute heart of it all. You should think of this section like the foundation of a pyramid. Understanding this section is probably the most important part of this whole course. A solid understanding of what follows will provide you with complete confidence in your ability to produce consistent and reliable profits. In this section we're going to look at the purpose of the markets. Why are they there? Now the real purpose is probably very different from what you expect. We will define the cash market in terms of what it is and how it functions. We'll be looking at who exists in the market and what are their roles, and also just how important the cash market is to understanding every other market. I'm now going to hit you with some terms that will not make a lot of sense at this stage, but they will in time, I promise. Now the terms are active and inactive holders, weak and strong holders, fixed and floating stock. Now, like I said, it's unlikely that you will have heard of these terms before, but do not worry about this at all. You will soon come to understand not only what these terms mean, but also exactly how this all fits together into an easily understood trading method that never ever changes, and that's the real power. Once you've learned how this works and then how to put this together into a trading plan that delivers consistent results, you will be delighted with the outcome. Let's make a start. The purpose of the markets. Now, it's generally believed that the markets are there for our benefit. They serve the needs of the masses to look after our pensions and investments. It's a place of safety and reliability. Some of the companies that are traded in the market, their stock are given names to imply the type of thing, such as blue chips, etc. However, we want to look beyond that we were presented with and instead look at the way in which the markets are operated. Now, the real purpose of the markets is to generate vast profits for the few to the detriment of the masses. The few in this case being the market makers, and above that. Now, what is generally not understood or even accepted by many is that the markets are nothing more than a profit generating business for those that control it. Now, by the time you get to the end of this course, you will have concrete proof that everything unfolds into a systematic and repeatable way. You'll be able to clearly observe the complete business model of the market makers and how they extract millions of dollars on a daily basis for their own benefit. Now, of course, once you understand the market maker's business model, then things start to get really exciting, because then you'll be in a position to base your trading entirely on their forever repeating and never changing methods. You're now going to be making money when they are making money, and nowhere else will you find anything that even comes close to that type of consistency. Let's now have a look at some markets. Okay, stocks, the cash market, futures, foreign exchange, commodities, derivatives, insurance market. The first thing is not to be intimidated by this far from complete list. I've only actually listed them here to show that there is a lot of trading going on in many different forms. The good news is that regardless of what market you're looking at, whether that be individual stocks or the currency markets, you're only going to have to learn one single trading method. In order to learn the market maker's business model, we need something solid to base it on, and for this we're going to use the cash market. Three important questions. What is the cash market? Who exists in the cash market? And what makes the cash market so important? First, what is the cash market? Well, the cash market is quantifiable, meaning that it can be measured. The cash market represents a physical market that has substance, unlike, say, the futures market, where you're trading on something that may or may not materialize into future value. As the cash market is quantifiable, it means we can observe it in a meaningful way. That is, if we see a trader, for example, buy a share in a company, we know that 1, someone's bought, 2, someone's sold, and 3, that the trader actually physically changed hands. So the cash market has real tangible content. Stocks, etc. physically change hands. It is this physicality of the cash that makes it the perfect tool to understand every other market. Who exists in the cash market? Well, institutions, private investors, active and inactive holders of stock. Now, don't worry about any of this terminology at this stage, because we'll clear that up for you very soon. Okay, now these three groups, they're basically the core of what we're interested in. By understanding these three, we are able to not only map out the market in terms of market movements, but also understand why the markets are moving. I think if I had to answer one question, what is the most important information a trader could have, it would be that the trader should not only be able to observe the market movement, but also to be able to understand why that movement is taking place and for how long that movement will continue. The reason this knowledge is so important is because unless we as humans are completely comfortable with our actions and fully understand what we're doing, there will always remain in the back of our minds that subtle and yet powerful feeling that all is not as it should be. This feeling of something is not quite right for a trader can cause all sorts of problems, which will ultimately be manifested in making poor trading decisions. Now, by the time we get to the end of this course, you will have the required knowledge, and you will know that you have that knowledge because you will no longer be questioning market movements or your trading decisions. What was once an area of confusion and indecision becomes clarity and with a sense of clear purpose. Okay, so now from just the previous video, video 1, you know more about the inner workings of all financial markets than 95% of traders. But that does not show you how to extract money for yourself, which is what you will learn about coming up in the next video. And don't forget, there is a downloadable guide to all the videos in this trader training in the description below, and a couple other links that you might find important.